Hi, fellow investors. Today we're gonna do analysis for Coca-Cola. The Coca-Cola company is more than just a beverage brand. It's a global icon and one of the most studied stocks in the world. For over a century, Coca-Cola has built a business that appeals to both consumers and investors. Its stock is known for stability, consistency, and decades of dividend growth, making it a cornerstone in many long-term investment portfolios. Coca-Cola started in the late 1800s with a single syrup sold at a pharmacy in Atlanta. From those humble beginnings, the company expanded into one of the largest beverage producers on the planet. Today, Coca-Cola's products are sold in more than 200 countries, with a portfolio that includes everything from classic sodas to waters, teas, energy drinks, and low or no sugar options. This global reach is fundamental to how the company makes money and why its stock behaves the way it does. A major reason Coca-Cola has remained financially strong is its business model. Instead of owning and operating all of its production facilities, Coca-Cola sells concentrate and syrup to independent bottling partners, who handle manufacturing, packaging, and distribution. This asset-light structure helps the company keep costs down, maintain high profit margins, and generate reliable cash flow. For investors, that translates into predictability and reduced risk compared with more capital-intensive businesses. In the marketplace, Coca-Cola is often seen as a defensive stock. That means demand for its products tends to hold up even when the economy slows. Beverages are low-cost staples. People still buy them during recessions. As a result, Coca-Cola shares usually experience less volatility than many growth stocks. While its stock may not soar during bull markets driven by technology or other high-growth sectors, it has a long history of preserving value during downturns. One of the most compelling financial stories around Coca-Cola is its dividend record. The company has increased its dividend every year for decades, making it a so-called dividend aristocrat. This long track record reflects strong cash generation and financial discipline, and it makes Coca-Cola especially attractive to income-focused investors. In addition to dividends, Coca-Cola also returns capital through share buybacks, which can support earnings per share over time. Recent financial results show Coca-Cola continues to grow in important ways, even amid global economic headwinds. In the full year 2023, Coca-Cola reported net revenues of nearly $46 billion, with organic revenue growth of about 12%, driven by both pricing and volume gains. Operating income also increased, and earnings per share grew more than 10% on a comparable basis, demonstrating the company's ability to expand profits. Cash flow from operations topped $11 billion for the year, underpinning dividends and strategic investments. In the following year, 2024, Coca-Cola again reported revenue growth, with net revenues up modestly and organic revenues growing around 12% for the full year. Earnings per share remained strong on a comparable basis, and the company provided guidance for continued revenue and earnings growth into 2025, even as currency fluctuations posed some challenges for reported results. Looking more closely at 2025 performance, Coca-Cola's quarterly results through the first half of the year showed a mix of resilience and complexity. In the first quarter, although total net revenues dipped slightly, organic revenues, which strip out currency and structural changes, still grew, and earnings per share increased compared with the prior year. Operating margins expanded significantly, indicating efficiency gains in the business. In the second quarter of 2025, net revenues continued to grow modestly, and organic revenues again posted solid gains. Earnings per share grew strongly, and the company maintained its competitive value share in the global ready-to-drink market. These figures highlight how Coca-Cola's pricing strategies, cost management, and diverse brand portfolio contribute to financial performance even when unit volumes fluctuate. Analysts and investors pay close attention not just to revenue and earnings, but also to margins, cash flow, and return on capital. Coca-Cola's profit margin and operating margin remain relatively high for a consumer staples company, and it continues to generate substantial cash flow, essential for supporting dividends and strategic initiatives. According to financial data, the company's revenue runs into the tens of billions annually, with a trailing revenue figure approaching $48 billion and strong net income metrics relative to peers. Despite the overall solid financial picture, Coca-Cola faces challenges. Currency headwinds remain a recurring theme because a large portion of revenue comes from outside the United States. Foreign exchange fluctuations can reduce reported earnings when translated back into US dollars. At the same time, regulatory pressures related to health concerns, sugar taxes, and environmental sustainability drive changes in both consumer demand and operating costs. Coca-Cola has responded by diversifying its product portfolio and investing in sustainability initiatives, from recyclable packaging commitments to water stewardship programs. It's a balancing act, adapting to modern consumer preferences while preserving the core brands that have defined the company for generations. In the end, Coca-Cola stock represents more than financial performance. It represents a long-term story of adaptation, global expansion, and shareholder value. Its combination of brand power, strategic execution, consistent dividends, and financial resilience makes it a unique and enduring presence in markets around the world.